Welcome to the Explainer. If you're a focused learner looking to really understand the mechanics of algorithmic trading at the highest possible level, you are in exactly the right place. Today, we're diving into something incredibly sleek and highly advanced, the Flash 2026. Now let's be clear right off the bat. This isn't just a simple algorithmic bot. It is a full-blown, institutional-grade NAS 100 trading architecture. We're going to break down exactly how this multi-state engine actually reads the market, manages its risk, and flawlessly executes trades without a single ounce of human emotion.
Okay, let's dive into this. Here is our roadmap for today. We'll be covering 1. Why traditional bots fail. 2. The Flash 2026 architecture. 3. The 5-state market matrix. 4. Dual-engine aggression control. And 5. Surviving real market chaos.
All right, Section 1. Why traditional bots fail. Look, if you've ever watched a standard automated system just absolutely blow up in a live market, you've likely witnessed these exact fatal flaws in action. Normal bots are entirely static. They rely on hard-coded parameters that might work beautifully for one highly specific type of market, but they completely break the second conditions change. They're built on curve-fitted backtests, those beautiful equity curves optimized on historical noise that completely ignore live execution realities. Things like spreads, slippage, and liquidity costs. And perhaps most dangerously, they have a complete lack of dynamic risk management. They literally just don't know when to hit the brakes.
The creators over at ALGODEERS actually hit the nail on the head with this quote. Most trading bots fail you before the market does. It's a stark reality. The painful truth is that being handed a complex, static system with zero post-sale support and absolutely no inherent risk management, that's what truly drains your capital. It's an execution failure, right from the start, not just a market failure.
Moving on to Section 2, the Flash 2026 architecture.
So the crucial point we need to make here is that the Flash 2026 is not just a bot. It's a highly comprehensive decision system. Before it even considers whether to trade, wait, or completely stand aside, it reads the live market context. It's analyzing the market state, the buying or selling pressure, the volatility, and the overall tempo. Think about how much of your own capital could be saved just by demanding to understand the environment before exposing a single dollar. It's a real game changer.
Let's look at the anatomy of how it actually makes a decision using this 4-part architecture. It's kind of like a gauntlet. Step 1 is market state classification, identifying exactly what type of environment it's facing today. Step 2 is the context stack, checking market pressure and participation quality. Step 3 is adjusting its aggression profile, so adapting its posture based on market turbulence. And finally, Step 4 is risk permission. A trade idea is only executed if it survives this entire gauntlet.
And guys, this isn't just some simple 4-point checklist. Within that decision stack, there are over 220 configurable controls, running alongside more than 25 distinct context and quality checks. The system is literally operating across 10 different time horizons simultaneously to build a complete 3D picture of the market before acting.
Section 3. The 5-state market matrix.
Now, what's really interesting about this matrix is how it fundamentally changes how a trade is processed. The exact same trading idea will be handled entirely differently depending on which of these 5 states is currently active. Think about applying this to your own trading. If the market is trending, the system might aggressively participate in directional flow. But if it reads choppy, noisy conditions, it exercises extreme caution. If it senses compression, it prepares for that coiled energy to release. It's contextual intelligence in action.
Section 4. Dual-engine aggression control.
This is where the algorithm seamlessly shifts its posture. On one side, we have the aggressive engine. This kicks in when market quality is clean and turbulence is low, allowing the system to hunt robust opportunities. But on the exact opposite side is the defensive engine. When market noise suddenly spikes and conditions deteriorate, the system violently defends capital. We're talking reduced exposure, demanding much tighter permissions, and prioritizing survival over profit.
Actually, even if a trade looks absolutely perfect on a chart, the Flash 2026 relies heavily on these global guardrails. Take the overextension stoplight, for example. If you've ever bought the absolute top just before a brutal reversal, you know exactly why this matters. If the market is already stretched and the timing of the entry is statistically poor, this global guardrail will literally block the entry from happening. Another guardrail, the momentum gatekeeper, ensures short-term pressure perfectly aligns with the trade direction. Essentially, the system is designed to say no to bad timing.
Section 5. Surviving real market chaos. So the developers really stress-tested this system through some incredibly violent historical market shocks. Look at this timeline right here. From the DeepSeek AI shock in January 2025, where massive market cap was just wiped out in a single day, all the way through major trade and tariff policy implementations, the big AI valuation scare, and even the geopolitical shock of the US-Iran conflict in early 2026. These events saw the Nasdaq drop severely, trillions were erased, and the VIX spiked well over 50.
And this brilliantly illustrates the core strength of the entire architecture. The Flash 2026 traded continuously right through these back-to-back policy shocks, crashes, and conflicts, with its risk guardrails active the entire time. A hard-coded retail bot gets completely obliterated by these sudden, massive shifts in liquidity and volatility. But a regime-aware system? It pulls back, it defends capital, and it survives.
Next up, verified performance and telemetry. Over a pretty chaotic 508-day window, which included all those massive shocks we just talked about, the system executed 718 total trades. It secured 473 winning trades against 245 losing trades. That results in a very solid 65.9% win rate on its maximum risk-to-reward configuration.
Furthermore, to put that into perspective, the system generated a profit factor of 1.66. So what does that actually mean? It means the gross win over the gross loss remains significantly positive, all while maintaining a 28% maximum balance drawdown from peak to trough on that upper risk band. It successfully extracted profit without risking catastrophic ruin.
Let's see how this translates into active trade management. Because you know the bot's job absolutely does not end at entry. It actively manages the entire risk lifecycle. Step 1 is defining the entry risk. But step 2 is the risk cut, dynamically reducing exposure as the market moves favorably. And then step 3 is the protection lock, completely locking in capital protection when progress is strong enough. It's managing the trade the whole way through.
This all circles back to its core philosophy. It is built for discipline. Context always comes first. Quality is prioritized way above frequency. And incredibly, it features a self-correcting feedback loop. The engine continually monitors its own recent performance by behavior type. So if a specific trading behavior starts deteriorating, the system actually becomes more selective automatically. It adjusts itself.
Now you might be wondering about deployment, because the barrier to entry for real institutional algorithms is usually a nightmare. But ALGODEERS guarantees deployment in under 48 hours. And no, you aren't just left alone with some random zip file to figure it out yourself. They provide a guaranteed one-on-one broker setup, specific parameter configuration tailored to your exact risk appetite, and live testing over a screen share. It's a white-glove onboarding experience for retail traders for sure.
We've covered a ton of ground today, from the fatal flaws of static bots to the incredible adaptive matrix of the Flash 2026. So I'll leave you with this final thought to ponder. Is your current trading edge actually built to adapt to the next unpredictable market regime? Or is it literally just sitting there, waiting for the next spike in volatility to break it completely? Thanks so much for joining me on this explainer, and keep learning.